Well, Bruce, now we need you. Bruce, with Security One Lending, we want to get into the idea of planning. And I want to make people understand a reverse mortgage does not take title away from you. That is the misconception out there. Reverse mortgage, you stay in the home. You do not have to make payments on those reverse mortgage on the money you borrow, or you can keep it in a credit account and actually earn interest on it. But the biggest misconception is that you will be thrown out of your home at some point in time by the big bag, whoever, the big bag reverse mortgage monster or something like that.
One of the big myths out there.
It's not for everybody, but it certainly needs to be in the tool shed as a planning device. So, Bruce, tell us a little bit more about you, your company, and how do we get a hold of you?
Sure. So again, my name's Bruce McPherson. I've been specializing in the federally insured, federally created reverse mortgage program called the Home Equity Conversion Mortgage Program for the past 11 years. I work at Security One Lending, which is the largest full-service reverse mortgage company in the nation. And my toll-free number is 866-223-7174. That's 866-223-7174. And so it's important for anyone who cares about their parents or grandparents to really take a look at the long-term picture and help their parents look at their options and prepare for their future. Reverse mortgages, when properly implemented by a responsible specialist, are all about helping you fund your longevity, helping you protect you from longevity risk, which means the risk of outliving your money. And there's a lot of different ways that a reverse mortgage can be structured. And when you're working with somebody who's responsible and knows what they're doing, it can be structured perfectly to fit your needs, whether you need a lot of money right up front for some particular reason, or better yet, receive monthly payments that are guaranteed to never run out no matter how long you live there in your home. Or what I really like is the credit line, where the available credit is guaranteed to grow for you month after month after month. And what's great about that credit line is there's no cap on that growth. So eventually, it's possible for the credit line to someday grow even higher than what your home value is. And financial planners who have studied this, the experts in the financial planning field who have studied it and written papers on it over the past couple of years all come to the same conclusion, which is it makes a lot of sense to get this credit line in place, this HECM or reverse mortgage credit line in place as soon as you reach the qualifying age of 62, even if you might not need the money for another 10 or 20 years.
And that's something, again, we know a lot of people are trying to retire. The baby boomers are now 62 to 65 years old, and they live here. And so it's a little different take of what we've been talking about. But if you own an average-priced home in San Diego, and let's say you were fortunate enough to pay off that mortgage, and it's a $600,000-$700,000 home, and you're 62, if you're a husband and wife, age 62 to 65, I think the tables say that one of you will live to age 90. I think that's where we're getting close to. So they could set up a credit line, not take any money out of it at this time. It's kind of financing their long-term care, possibly, because they may not need it till they're most likely in their 80s or 90s.
Right.
How would that work?
So I'll give you an example. So let's say the home is worth $500,000, and they put this reverse mortgage credit line in place as soon as they're both 62, and actually, pretty soon the rule will be changed so that only one of them would have to be 62. But it's actually better if they wait till they're both 62. So they put it in place. Let's say they'd qualify for a credit line of, say, $250,000 on that $500,000 home, and then every month that credit line will be growing at a guaranteed growth rate. Right now, we can do a growth rate of around in the ballpark of 3-4%. If rates go up in the future, that growth rate goes up. So bottom line, let's say they don't touch that credit line. They let it grow for 30 years. Now they're 92, and they need in-home care. And that credit line will have grown to, say, I don't know, I'm guessing off the top of my head, it's well over $1 million, maybe in between $1 and $2 million of available credit, and they never have to make monthly payments, no matter how much they borrow from that credit line.
For those that did not study compounding interest back in school, please go back to your schoolwork and understand how compounding is
the value of compounding.
The value of compounding.
Yes.
Yes. Yeah, we can talk about the rule of 72, and maybe that one. There's the tease for everybody to come back for our last segment here on the Mr. Credit Radio Hour. Bruce, fantastic. We're going to be back with more about that. We're going to tell you how with some events coming up with Elder Help that will help them support our seniors. So stay tuned. Don't go anywhere. We'll be right back with more.
Welcome back to the Lunch Hour with Mr. Credit. And today it's Fastball Friday on ESPN Radio 1700.
Welcome back to the Lunch Hour with Mr. Credit. This is Ron Greenwald. Fastball Friday, I hear, is the theme of today. And we have the Padres playing Colorado, I understand, tonight. So hopefully they're kind of on a roll and things like that. We want to get back to Bruce McPherson on reverse mortgages. And so continue a little bit about some of the new rules that are coming into play that, again, are very important.
Sure. A rule is going to be coming into effect on August 4th that the government just announced about a week or so ago. That it's been a long-awaited rule. It's an improvement to the program, and it's going to eliminate the problem that has existed in the past where up until now, if there was a husband and wife who owned a home, but if the wife, for example, was not age 62 or older, then only the husband could qualify for the reverse mortgage. And so, an ethical specialist would tell them, hey, wait until you're both 62 if you can afford to wait. But unfortunately, in a lot of cases, that's not the advice they got. And so the younger wife would deed herself off title so that the husband could qualify. And that would cause problems, of course, for the wife down the road if the husband predeceased her and the loan balance would come due. So now they're changing the rules so that in that situation, the wife would be protected. So if anybody applying for a reverse mortgage after August 4th who's in that situation where one of them is not age 62, that younger spouse will be protected. So if the older spouse dies first, the younger spouse, nothing will happen. The reverse mortgage loan balance will not come due. So they'll continue to own the home and live there as long as they want.
I actually have a purchase situation. You can use a reverse mortgage for a purchase of a home as well. Usually takes about a 40% down payment in that range.
Yep.
And here was the situation. They were two women, both about 80, 82 years of age. They were both airline I can't use the word stewardess anymore.
Flight attendant.
Flight attendant. Sorry, I'm sorry. Don't send any nasty emails. Flight attendants, and they were been best friends for 30 or 40 years. Both their husbands had passed away in the last 5 years, and they lived about 3 or 4 miles from one another. And they go, well, this is crazy. Why are we maintaining these two large homes? Why don't we sell both homes and buy a home? And from the proceeds of the sale of the two homes, we can buy a very nice, home that will accommodate us both. You'll have your wing. I'll have wing. Flight attendant's wing. That was a joke for those out there. We'll both have our separate quarters, so to speak, and we can use it and do a reverse mortgage, and we'll never have to make a payment. We'll split the property taxes, and if there's any homeowners association fees or any if they buy. So
great.
That's what they did. And so, again, talking about either the intergenerational, where the grandparents are going to move in with the kids or the grandkids, and they want to go and buy a bigger home, so they have that. You can do that,
yeah,
right?
You can get the reverse mortgage. So in this example, what they did is they got the reverse mortgage on that new home as they were buying it. So that was their mortgage. That was their purchase mortgage.
Right.
It's called the purchase HECM, or purchase reverse. And buy a home. Buy the right home for your retirement, be able to afford the home you want, as long as you can put, say, 35 to 50% down, depending on your age, and never have a mortgage payment to make, guaranteed, from the day you buy it until the day you die.
Yeah, and there's also a story, though, again, because all these are based on life expectancy tables. It's like it's come to sound like a life insurance policy.
Right, because, full disclosure here, because the loan balance is going to grow over time with deferred interest, unless you choose to make payments, which
there was
very few people do.
There was a story of a lady in Cardiff, California, and she had a reverse mortgage on her home, but she lived way past life expectancy. She lived well into her early 100s. And so the reverse mortgage company, I'm sorry, Bruce, I have to say this, full disclosure, they ate it.
Yeah, they would have ended up giving her, by the time she passed away, they would have given her the money that they had given her over the years, assuming that she was receiving the monthly payments that are guaranteed to never run out, or if she had a credit line, because the credit line keeps growing. When you add up how much money they gave her over that time, I'm sure it was a lot more than what the value of the home was.
And more power to her.
Right, so she won. Yeah, that's the ultimate outcome.
It's a great game.
Right.
So if you think you're going to outlive, and you stay in your home. And
when that in a case like that where she took so much money over all those years, we have to assume the loan balance at the end was probably higher than the home's value.
Right.
But the just to clarify for the listeners, when you say the lender ate it, what that means is the heirs did not have to pay the difference.
Exactly.
There's a non-recourse provision. The lenders don't have recourse to come after assets, etc.
And I want to make that point very clear because we have the children listening.
Right.
The adult children are listening. Adult children, you do not lose anything in terms of nothing's going to come out of your pocket.
Right.
Now, again, the home is not yours, obviously. So,
it's your parents' home.
It's your parents'
and
home.
You might still inherit some equity at the end.
If there's equity
left, it depends.
If there's equity at the end, you get it. So don't start crying and all that whining. So, because I believe, and I'm going to steal a line from Paul Greenwood, our famous deputy district attorney, and God love Paul for what he's doing out there.
Mm-hmm.
When he talks, he mentions the ski vacation. And we all know what spend kids' inheritance. You deserve the highest quality of life. You deserve the respect as an elder. You've been, if you're a World War II veteran, now we're dealing with Korean War veterans, you deserve it. Don't feel bad about going out and getting the money that you need to enjoy your quality of life, whether it's through elder help, comfort keepers, or a reverse mortgage. Kids, sorry. Too bad. You go out and make it on your own, and I'm sorry that's the way I feel about that. Got to wrap this up. Bruce, I want to give your phone number. Give your phone number one last time because you're going to finance all this fun.
It's 866 223-7174. That's my toll-free direct line, 866-223-7174. And real quick, I've got an announcement on this coming Wednesday, the 21st. We're going to be doing a seminar at our corporate headquarters, which happens to be right here in San Diego. This is for financial planners, attorneys, accountants, realtors, bankers, anybody who works with seniors, who's a professional, who wants to be more educated about all the different options and strategies that can utilize a reverse
Come
mortgage.
Listen to Bruce and don't read what's published in the newspaper because most of those people have never even talked to a reverse mortgage person in their life.
They never get it right.
The press. Well, welcome. Thank you all. I had to run. I don't even have time to say goodbye. Have a great weekend. Be safe out there and go shake and hug a first responder this weekend. Please do so and give them some loving from all of us. Thanks. Have a great weekend, everybody.
If you would like to contact Mr. Credit or access any free offers mentioned on the show, just go to mrcredit.org. That's mrcredit.org.